Hi, everyone. Thank you so much for joining us this afternoon. If you are here for the Advocating for Access Insurance 101 webinar, you are in the right place. And we are going to wait for just a moment while folks trickle in from our waiting room before we get started. All right, we'll just give it another few seconds before we get started. Thank you, everyone, for your patience. All right, it looks like our numbers are leveling off. Well, thank you so much, everyone, for being here today. We're really happy to see you, really happy to have you join us as we dig into our monthly webinar series, Advocating for Access, where we have partnered PPMD with the Duchenne Family Assistance Program, specifically Kelly Maynard from Little Hercules, to really dig into issues around access to approved therapies. Today, we're going to talk a little bit about Insurance 101. So what are some of those word salad acronyms that you see? What do they mean? How do you choose a health plan? What are some of these different decisions that you need to make as you consider which health plan you're going to enroll in and how to navigate some of these pieces? We're going to change up the format a little bit this month. We want this to be didactic. We want it to be conversational, and we want to answer your questions. So as we go through the webinar today, please feel free to drop your questions in the chat. And when we work through the formal slide presentation portion of the webinar, we will then pivot to an open Q&A, and we will dig through as many questions as we possibly can. And of course, as always, if you have a question that comes up after today's webinar, we encourage you to reach out to us. You can shoot us an email at careteam@parentprojectmd.org. So with that, I'm going to go ahead and attempt to share my screen. All right, bear with me all. Thank you for your patience. All right, are you guys seeing my slides?
Yes.
You are seeing. Do you see today's speakers?
Yes.
Okay, perfect. All right. Thank you for your patience, everyone, as I navigate my own computer. So as I mentioned, I am your host today. My name is Rachel. I'm part of the care team at PPMD, and I work closely with lots of different teams throughout the PPMD organization as we work together toward advocating for access on every level. We also have Brian Denger, who is our community engagement coordinator, and Kelly Maynard, who is the president and founder of Little Hercules Foundation. With that, I'm going to go ahead and pass things off to Brian.
Hello, everyone. As I'm sure we all can agree, health insurance is one of those issues, one of those things that we don't like to think about. And even when we are well and don't need health insurance, it's still something that probably gives us the shivers. But there's important reasons for us to be mindful about the various forms of health insurance. And in this community in particular, where families often want to travel for interdisciplinary care outside of their own home state to get more specialized care, there's need for people to understand the various components, the various elements of the individual health plans. So we'll start off with a quick overview, the 10,000-foot view of managed care and high deductible plans. And I'm just going to give you a quick description. The HMO is the Health Maintenance Organization, PPO, Preferred Provider Organization, Exclusive Provider Organization, EPO, and POS, our Point of Service Organization health plan. Now, all of these plans are managed, and the reason that they're termed this way is they are an effort by the companies to provide a more cost-effective way of covering healthcare for a company in which their services are paid for. And there are caveats, there are pluses and minuses to all of those arrangements. Another component is the high deductible health plan, and this may feature be featured in any of the managed health plans that I mentioned in the past, and oftentimes they are paired with a health savings account, which may be funded by a sponsor, an employer, a company, or the individual themselves. And there are federal limits to how much these pre-tax dollars can be put into that policy, and the policy will pay for specific covered medical expenses. And then the last term is managed care organization, which is something that has to do with Medicaid. And it's important to know that even states are on the lookout for cost savings. And at this point, all states except for Alaska and Wyoming have some form of managed care health plans available. They may be all of the people who are served by their benefits, or it may be a portion of their population. But once again, it's in a need to control expenses. And briefly, Medicaid in an individual state will pay a company who accepts a set payment for services, and that's how these healthcare, these managed care organizations operate when you with Medicaid. And again, it is important to note that, because regardless of whether you have private health insurance and Medicaid, you have to know about the commercial plans as well, because with Medicaid, that's your payer of first resort. So if you have someone covered in your family by Medicaid, your private insurance, commercial insurance pays first, and Medicaid is picks up whatever their policy allows after that. We'll go to the next slide and look at some of the differences among these plans. So here we have a graphic that describes different features and whether or not they are applicable, or how they're applicable to the various health plan. And as you can see, HMOs and point of service plans require a primary care physician. And that's important to note, because when you have a primary care physician required, they're typically the individual who helps with prior authorization. They may complete the requests on your behalf, but they're also going to be the individual who is going to provide you with a referral if you need specialized services and care. Out-of-network costs, out-of-network coverage, that's an important element for families who are traveling outside of their area, and depending on the various types of health plan that you may be covered by. As you can see, HMOs and EPOs, again, that's the exclusive provider organization, do not cover out-of-network costs. And families oftentimes may find this out by accident. They go to a lab that might be out of network without realizing it, and then they get dinged with a much more expensive bill. There's an asterisk next to that, because emergency care is required under the Affordable Care Act to be covered by regardless of whether it's in or out of network. Under a PPO and POS, you probably can get coverage under a out-of-network provider, but your out-of-pocket costs may be modestly to significantly higher. And it also depends on whether or not the charges that provider is assessing are reasonable and customary, or would be typical for the provider's typical payment plans. And if it winds up being in excess of what they consider reasonable and customary, of course, the patient is going to be paying the difference. So we talked about pre-authorizations, whether or not they are required. Under HMO and PPO, it says no, but there are instances in which that is, especially for the expensive treatments, that will still be a component. And then the last element is I had mentioned early in conversation was the reason that we have managed care plans is because it's an effort by companies to provide a product at a more reasonable rate to a customer, the employer or the company in which somebody is getting that insurance from. And so oftentimes people will ask us, well, which plan is the best? I know that people I work with have come to me in the past and said, well, you're a high health care consumer, so you must understand, you must get the best insurance there is. It's a debate about, or a balance about, what is your premium costs, looking at what your out-of-pocket costs, whether it's if you're going to be getting out-of-network services, what the co-pays look like, what the deductibles look like. And you combine all of that, and many plans have a pre-screened tool to help you to try to assess that. But sometimes the most expensive plans wind up being less favorable to people who are traveling out of network because they're not able to get the services at a rate that's appropriate. So in the last few things I'd like to talk about is the idea of copays. So in the various plans, copays also can be a little bit can be quite a bit different. HMOs, they're typically lower. Again, you're going to see physicians who agree to a negotiated rate. So the consumer will be paying a more modest copay because it's all worked in. PPOs and EPOs, they generally have copays and coinsurance. And the distinction between them is that the PPO, you're going to see them accelerate, like with POS, when you get out of service, out of network services. So all of that is important to understand. I realize this is still very, very confusing, where we're just trying at this point to provide an overview of the important elements of these plans. And then this, we hope, will lead to your questions, and then it'll tailor how we will choose our next topics in upcoming access webinars. So with that, I'd like to turn it over to Kelly, because she's going to talk about another extraordinarily important element within these plans.
Yeah, thanks, Brian, and thanks everyone for joining us today. So we've been getting a lot of questions over here about what's the difference between fully insured, self-insured, and why do I care? How does it affect us directly, our family, and most importantly, our child with Duchenne? So this is just a real quick overview. I've just highlighted some of the major differences between fully insured and self-insured employer plans, which are also referred to as ERISA plans because they are regulated by ERISA. So fully insured plans, those are ones where your doctors and hospitals are paid by your health insurance company and not your employer. Your health insurance company collects a monthly premium from each enrolled employee. Fully insured plans are regulated and governed by state laws. Every state in our country has a state insurance commissioner that oversees the regulation of the business of insurance, all types of insurance in each state. So one of the major differences between a fully insured and self-insured plan is, where do you go when they act badly? What do you do when your health plan does something that is either illegal or just they're not doing the right thing? So for fully insured plans, I've included a link there. The NAIC is the National Association of Insurance Commissioners, and it is a quasi-private governmental organization that each state participates in. But it's more than a trade association. They do really, they pass model laws that are, because of the way insurance is regulated state by state, it's a way for on a national level to standardize some of those lines of business. So if you need to find your state's insurance commissioner to file a complaint, that's the link that you will go to find your state. Self-insured employer plans. Your doctors and hospitals are paid by an administrative service company that usually is a health plan. And they will collect money from your company on a contract basis. And what they do is they don't pay the claims, but they manage claims. They advise your employer on coverage decisions. And then that same company is paid a fee under that contract to manage your employer's self-funded program. Self-insured plans are governed by federal laws, like I said before, through the Department of Labor. And all self-insured employers that provide a medical and pharmacy benefit are governed by the Department of Labor. So if you want to file a complaint against your employer, and I want to stress that if you file a healthcare complaint, you're doing it against your employer there, and that's the link that you can go to file that complaint. So those are the major differences. There are more that get really, really into the weeds, and we'll go into some of them on the next slide. So how do you know if your plan is self-insured? Well, most of the times you don't. Because many employers use a third-party administrator that is a health plan, such as like an Aetna or a UHC or an Anthem. You don't really know, and your health insurance card is not going to tell you that. So to find out, you're going to have to call whoever manages your employee benefits or your HR department. And I would urge all of you to do this, find this out as soon as possible, because it really does matter when you are attempting to get coverage for something like a Levitus or any other kind of high cost therapy. Next slide, please. Okay, so another question that we get once families find out that they are in fact working for a self-insured employer, they ask, well, will my employer have to pay the total cost of a Levitus or any other therapy that you might be trying to receive? That answer is no. So there's something called reinsurance, and you can't really talk about self-insured employer plans without talking about reinsurance, but this is something that happens in the background, behind the scenes, that you normally won't have any impact on your day-to-day experience with your health plan. But it is very important because it is a way that self-insured employers manage a financial risk of being, all of a sudden encountered with really high healthcare claims. It's also known as stop-loss coverage, and it kicks in at a certain threshold. So this threshold can vary widely among self-insured employers. Think of it as an insurance plan for insurers. Most self-insured employers purchase reinsurance to protect against unexpected high health claims, and it can come in a couple different forms. One example that I've listed here is a company can buy, and this is one we see mostly with smaller self-insured employers, maybe like only a few hundred employees. They can buy a per employee stop-loss policy, which limits the amount the company might have to pay for any given employee at, say, for example, $30,000 a year. So for that employer, they have the reassurance that if one of their employees is diagnosed with a rare cancer that's going to require lots and lots of, healthcare treatments and services, their financial risk is limited to $30,000 per year for that employee. So with this, another example, if you take a Levitus, for example, the list price of $3.2 million, usually you can imagine is quite the sticker shock for a lot of employers when they, figure out that they have an employee that's trying to get access to it. And say their stop loss coverage kicks in at $100,000, your employer pays out of pocket only $100,000 for that. And the reinsurer pays the balance, which is 3.1 million. So I believe that's the next slide, right? Is there another one? I do want to mention too, real quick before we go to the Q&A, self-insured employers are where we see things that are unique to those types of health plans, things like lasering, things like copay accumulators. It really is a way for employers to try to manage their cost. That really gets in the weeds. And I just want to tell anyone that's watching this webinar, if you run into something, lasering, where your employer has lasered out either the diagnosis of Duchenne or any treatments to treat Duchenne, you can reach out to us and we can help with that. And that's it.
All right, thank you so much, Kelly, and thank you, Brian, for that overview. That was incredibly helpful. At this time, we're going to go ahead and transition over to our question and answer portion of the webinar. So if you haven't already, go ahead and drop your questions in the chat. We would love to have a conversation with you and dig into some of your burning questions. I know that we had a couple that were actually shared with us in advance of today, which we're really grateful for. So while we wait on some of those live questions to come in, we'll go ahead and dig into the previously submitted ones. So the first I am going to toss to you, Kelly, and that is, I wonder, has any child received a Elevidys under Cigna insurance? Can you talk to me a little bit, Kelly, about Cigna, their policy or lack thereof, and what we know so far?
Yeah, so Cigna does not have a policy that they've issued yet on Elevidys. However, we do know that they are denying it at this time. We are doing some direct outreach with Cigna to understand what they're denying, you know, the basis of their denials are. So hopefully we can work through that and convince them to issue a positive coverage policy. But at this time, they are denying it. If you are covered under Cigna, appeal. Work with your provider to make sure you appeal. And if you get a denial, reach out to us.
So
and Kelly, what's the best way to reach out to you?
Kelly at littleherculesfoundation.org, or you can just submit an application. Actually, that's the better way. Just submit an application to the Duchenne Family Assistance Program at duchennefap.org.
Thanks, Kelly. And what was that, Brian?
So one quick addition to Kelly's comments that I wanted to make was that both Kelly and I look at trends with insurers, whether it's the commercial plans or the Medicaid plans, as to how they treat these policies. And with Cigna specifically, we've seen an announcement in their broad paperwork that is sent to their companies, and it just describes it as a new to market drug, and there is a time frame in which they typically would assess the treatment and then develop a policy towards it, but they're a bit delinquent compared to the other major providers. So we're watching this one intently to see what is going to happen, and we're right now not very optimistic.
Thanks, Brian. That's really disappointing, but we really appreciate all of the work that you and Kelly's team put into tracking these policies so that we can be sure that we have reliable, up-to-date information, and we can be a resource to the community if this is something that you're wondering about in terms of Elevidys policies, or in the future policies specific to other, hopefully newly approved therapies that we will hopefully see later this year. I think that a nice topic to talk about that's somewhat related is trends in policy coverage as it relates to approval and access to multiple eligible therapies. And the question reads, is it possible if a child is already on a drug approved by insurance that he would be able to also get an approval for a new treatment at the same time? I don't know if Kelly, you want to start, and then Brian, go ahead and bring us up on the backside.
Yeah, so with the drugs that we have on the market now, there is no, I guess, clinical reason for this answer to be no, right? So if you're on an exon skipping therapy and you want to get the gene therapy and you are still covered by the same health plan, yes, technically that you should be able to do that. However, I just sort of want to put an asterisk on the end of that answer that, combination therapies in Duchenne are new and untested. And with the novelty that it brings to our community, there's a lot of unknowns there. We've seen some health plans actually put in their ELEVIDIS policies that, that doctor has to certify that they're not going to prescribe an exon skipping treatment after their dose with gene therapy. Honestly, we feel like that is not something that's enforceable or even reasonable. I think that's a posturing move. That's my personal opinion, because a health plan has no right to tell a doctor what they can prescribe in the future for a patient. So the answer to that is yes, but I caution that we are still navigating how the payers are going to respond to combination therapies.
And Brian, have you seen any policies that speak to this topic?
So the only thing that I can describe is I would call them almost like step therapies. And I've seen that with exclusions of covering, for example, Emflaza in an antisense therapy like Exondys or Vyondys. And there have been policies that I'm sure Kelly is equally aware of, is there is an exclusion that there has to be a try and fail period of a child trying Emflaza before the approval of some of these drugs. Others, there are no exclusions, but the families do find great difficulty because of the expense of the treatments. And one last thing I'd like to add: we've been talking a lot about therapies, about drugs. Health insurance companies also cover durable medical equipment, and that's important to families. And those are considerations to check into when you are looking at the self-funded versus fully funded plans. Whether you're looking at the types of health insurance, ask for an explanation of benefits, if possible, prior to enrolling. We're coming to open enrollment period, and look at what some of the impediments might be, or what the limits might be in getting this equipment covered appropriately.
Yeah, and that's something we can, Brian and I can both, we can help with over here too, is we can pull those policies for you of any health plan that you're considering, if you're lucky to have options. A lot of people don't have options between health plans anymore, but if you do, you can reach out to us and we can look those durable medical equipment policies up.
Absolutely. Thank you so much, Kelly. I'm going to add another question of my own, and that is in regard to some of these different buzzwords, some of this insurance lingo. I know Brian went over some of those acronyms. That was really helpful. But then, Kelly, you threw out lasering, and I was like, wait a minute, what now? So my question for you is, when we hear these types of words and we don't know what they mean, is there a good place that we can go to find answers to our questions? Is there a resource that you would direct a family to if they're trying to understand some of this insurance lingo?
Yeah, so we send a lot of the pacer.org. They have a lot of really good resources up there that goes in depth with insurance. The Kaiser Family Foundation is an amazing resource for a lot of things on not just insurance, but healthcare in general in our country. So those are two that I would say, check out if you can.
Brian, do you have any other favorites that you want to add into the mix?
Actually, those are the two that I utilize with quite a bit of regularity.
Awesome. And then I'll also mention too, I know that we're near time, but I do want to put a plug in for a lot of the resources that we already have on our PPMD website. We have our PPMD Insurance Access and Coverage Resources Hub with gobs of helpful information. And so many of the questions that you might have are going to be answered right there in writing, already available to you. But if your questions aren't answered through today's webinar, through these written resources, we have a couple of different ways that you can engage with us, and we can provide one-on-one direct support and case management. One is through PPMD for You. PPMD for You is a platform that allows us to schedule appointments at your convenience with members of our team to dig into a lot of these questions. You might end up on a Zoom with myself or with Brian, and we'll talk through your specific policy, what your insurance policy coverage looks like, some different, introductory types of questions. And then as you work through trying to seek approval, working through appeals, you can work directly with Kelly and her team at Little Hercules and the Duchenne Family Assistance Program for that direct case management. And the DFAP has gobs of resources beyond just that, approval and access service that they offer. So please use those resources. This is why we partner together, so that we can really provide this comprehensive suite of services to support the community. With that, I want to go ahead and remind everybody that this is there it is. This is a monthly webinar series. So thank you so much for joining us. We will meet again next month, Thursday, October 26th at 1 p.m. We really look forward to your questions. Please send them to us between now and then. Let us know what you're worried about. Let us know what you're wondering about, and we'll dig into these issues. careteam@parentprojectmd.org. And a recording of this will also be available on our YouTube channel and archived in our video library on our website, so that you can come back, use it as a reference. And with that, I want to thank our speakers, Brian and Kelly, for joining us, and thank you all for joining us as well. And that will conclude today's webinar. Thanks, everyone.
Thanks. Bye.